That lighting, though. The TV's on in the background, but I like this ambiance.
How's it going, folks? Welcome to the show, Short Vol Nation. I'm your host, Killer Dave Lincoln, and let's get into the news. And today on VIX News, we have a continuing vol crush that's going on. It's kind of been the story all week, and we see the VIX going lower, and we have about a week until expiration, and so we could see some real serious crushage going on in this next week of sessions here. If we look at the numbers, we're going to see the VIX trading 1236 down 33 cents, with front month futures 1355 and second month 1455. Let's take a quick look at VIX Central. I have some other stuff to talk about today, so I'm going to go quickly through this. And Contango now over 7%. It looks like we closed yesterday, as was pointed out to me, below 7. However, we are moving up in the range here as far as Contango goes. I've got some exciting stuff coming up this Friday. I will be live on someone else's show, which I will point you to when we get closer to the time. I also have another live interview on Friday. So a couple things going on Friday is really exciting. I do want to direct you, although I haven't checked it out yet, I do want to direct you to phenomgroup.com and Seth's latest article reviewing 2008 VIX trading and complex trading fundamentals. I haven't checked that out yet, but I will soon. I wanted to direct you briefly to, and here is that article right here. I wanted to direct you briefly to something that I like to look at sometimes. I don't think I've really talked about it before, but if we do go to barchart.com here, there is something called and we go into our options, highest implied volatility. And this is going to give you, it's basically a scanner of high volatility options, stock trades, and to be honest, most of it is garbage, because it's like stuff where it's like some put that's like 5-cent bid, and that 5 cent represents like 500 vol, but it's not really vol. So you really have to kind of screen out the garbage here. And kind of when I go down through this list, what I end up doing is looking for the higher price stocks, because a lot of the percentage, like volatility stuff, is going to be these like really low price stocks, like $2 stocks, and a lot of it, like I said, is garbage. But if you do cruise through here, you can find some higher price stocks that actually have some higher volatility plays. And so, for example, I found this one, IQ. Okay, so let's take a look at this for a second. Okay, so IQ is basically IQIYI. which is the ADR, is a Chinese company. I guess you can sort of think of it as the sort of Chinese Netflix. Now, I apologize to those who actively trade this and who know way more than me about it, because I just kind of looked at it this morning. But if we look at the chart of IQ here, we see this huge rally over the summer and then a pullback. And implied volatility is really high in the options here. If we go to options here and then set my chart for implied volatility, you're going to see stuff in the front months of around 100 vol. So, close to the range of like a UVXY. Now, unlike a UVXY where we have kind of a the dynamics of a UVXY are it can spike to the upside big if something happens in the economy or if some big news story happens. It's got pressure to the downside most of the time. Well, when you're analyzing an individual equity, each one has its own story, and you really need to get in tune with what the equity story is, and you really need to research and get real in tune with it before you start making options trades. But this is one that's interesting to me. If we look at the at-the-money straddle in July, stock trading around 32. The at-the-money straddle is about $6. $6 in juice with 17 days to go. That seems pretty rich. There's something you can do there. Might be interesting to maybe sell a strangle, maybe like a 27. I don't know, 27.35 strangle. For 250 maybe. So let's just check that out real quick. So if I go to my Analyze tab here, so 17 days to go. If I sell the 27.5 put and the 35.5 call, so selling a strangle for like 250, and if you just look on the chart here, you can see your Greeks for that, and you can model that. And I would recommend, if you're going to play some of these games, that you kind of focus in on the stock. Things you could do are like maybe go to Seeking Alpha, and look up the stock. So IQ. I was looking at some article on here this morning. And it's giving us something completely different. Here we go. IQ. Tencent is coming. Should you be afraid? Alternate perspective. Don't fear the Chinese stock. Buy IQIYI today. Anyways, my point is, do a little research before you jump into something like this. The other one I saw that was kind of interesting to me was this Acorn Inc. AKRX. $18 stock. This was a deal stock where the deal got busted, but it seems like there's still a chance maybe that the deal could go through. Deal was busted, and the stock fell out of bed, but the out-of-the-money calls and stuff are way bid up. So something's this thing is still in play. Let's put it that way. So if you look at this, you see, out to December, we've got like 100 and something vol. the August vol and the 200s. So you got some real meat on the bone on this issue. And it looks like the deal got busted, but the suitor is maybe still negotiating with them, and this could rip to the upside at any moment, and seems to be trending up right now. So interesting stock here. Like I said, I apologize to those of you who trade this actively all the time that I'm not giving you like any brave new insight, but just bringing this to people's attention to check out. If you are trading this all the time, then I'm just bringing more awareness to it. So maybe there'll be more people to trade with on the other side of your trade. So don't curse me out too badly. It's funny at SIBO, people don't want you to talk about their stocks because they want to keep it quiet, but that's for market makers who want to keep the trade quiet in their little pit. But this is different. This is retail. So check out the stock Acorn. Some really high volatilities. There's some stuff to be done, definitely in this one. And then let's just go for a second to an old favorite of everyone's, Tesla here. And once again, a high volatility stock. Anybody who's traded Tesla through earnings at all knows that this is a monster, a beast. And I was just looking at modeling one of the calendar spread, sort of a calendar spread, kind of like we did in UVXY, and see what we come up with in Tesla. So I was looking at something like the at the money calendar spread, doing like a SEP. So buying the at the money right now, maybe it would be the 325 strike. So buy a SEP 325 call, and against it sell like a call 17 days out in July, or even an August call, let's say. August 325 call. Okay, so let's take a look at that. And I'm going to go. If you go to the far left side here, you can right click and pull this drop down menu, and you've got Analyze Trade, and that will bring us right into the Analyze tab with this one here. So, so if I do this August, let me see if we're in the screen here with this trade that I'm doing, because I was a little out of the screen yesterday. Okay, so we're still in the screen here. Let me make myself a little smaller though, because I'm kind of in the way as usual. Okay, so this green at the bottom of the screen here is a potential trade that I've pulled up in Tesla. And I'm looking at the SEP August 3.25 call calendar spread. And if I go to the far right side of this green trade, I can right click and I can select create duplicate order. And what that's going to do is it's going to bring the trade into my order entry area, so I could actually execute the trade. And if I hit confirm and send, it's not actually going to send the trade. What it's going to do is it's going to tell me some more information about how much buying power the trade is going to take up. So buying power effect in the options is it's going to reduce buying power by $895. And so that's good information. That means each time you do this trade, it's going to take $1,000 out of your buying power, whatever that is. And but as far as the Greeks, if you do this counter spread one time, then you're going to collect basically $20 a day in theta. But your Vega is going to be 23 Vega. So you want to be careful with this sort of trade. When I look at it just like that, I think, well, 23 Vega, this is just doing the trade once, but if you do it, if you're going to do it like 10 times maybe, so if we go back to analyze and I add a number, I change the number of times for the trade to 10. Then all of a sudden, if you do it 10 times, so it would take about 10 times the buying power, so maybe 8,000, 9,000 in buying power. Collect $194 a day, but it's 238 Vega. Now that's a lot of Vega. So you want to be cognizant of where we are in the earnings cycle for Tesla, because remember, on earnings, volatility is going to be cranked, and then right after earnings, it's going to get crushed. So if you are if you had this trade on right as earnings comes out, volatility is going to come in. And if it comes in, 5 points, then all of a sudden you're losing $1,000 on this trade right off the bat. Conversely, if you do this trade right after the earnings crush, then maybe you get a little pop in volatility as you move towards the next earnings. So this is a high Vega trade in this particular trade. And so, yeah, it's nice to collect $194 in decay per day. And if I do go ahead and roll the days out a little bit, that is going to increase over time. Now you're up to $250 in theta per day, but there's a high amount of Vega. So you want to be cognizant of where in the volatility range for Tesla you're putting this trade on. And right now, when I look at the charts, we're showing July to be around a 70 vol, something like that, and SEP to be around 100 vol. No, I'm sorry. SEP to be around 50 vol. Okay, so I would recommend putting this, if you're going to do a calendar, maybe put it on after, kind of right after earnings when vol is a little lower, or at least not right before earnings comes out, because vol is going to get crushed and you're going to lose money on the vol crush if you're not careful with this particular calendar spread. So let me know if if you like this format of looking at some different stocks. I know a lot of people are here just for the VIX, and I will be doing shows just on the VIX, but I think there's some interesting stuff here to do besides the VIX to check out. So there you have it. Let's go back to our screener for a second and see what else we can possibly see here. So once again, I was going to barchart.com. I was going highest implied volatility. We could also check out percent change in volatility and see what's up with that one. And this is a lot of times it's going to tell you when there's a block trade or they're coming for a certain call, and and so volatility will get cranked in an individual option because they're coming for it. They want that call and or that put, and it's moved the markets. So I see. Let's see. And you can see as we go across the screen here, volume and then open interest. So when you've got open interest of 1,000 and 4,000 trade in one day, then that's probably a significant move. Some of these are lower implied volatilities. ARQL 100. I'm kind of looking for high volatility and the move in a higher price stock, which is, I guess, a lot to look for, but. And then here we have stuff getting crushed, decreased volatility. So same thing, kind of looking for the higher price stocks with a higher vol. This one looks like maybe they sold a lot of these puts. Let's take a look at this Live Oak Branch LOB. Now, what is the opportunity when you're looking at an issue and it says decrease in volatility, and this is a 23 vol stock. It looks like they came in, and if you've got decrease in volatility, that's going to usually mean that they came in and they started selling a lot of these options. So here, they sold this put, a bunch of these puts, 4,000 of them. But this has sold 4,000, open interest was 4,000. So they might have been coming in to sell these back out, this particular issue. But let's take a look at LOB for a second. And so Live Oak Bank shares. Let's take a look at our volumes. And so this is showing really limited open interest here. So this was LOB, the Jan 35 call. I'm sorry, D's 35 call. Okay, so here we go. D's 35 call. Now look at this thing. It's got no open interest at all in any of the options. None of this stuff trades ever, ever. And all of a sudden they came in and they crushed these D's calls. These 35s. And they look so cheap, right? $32 stock, D's calls for $1. This one, let me get out of the way here. Okay, so this one, when they come in and they crush the farthest out option, and in something that doesn't trade at all, and this may not be the case with this one, but just as a market maker looking at this and knowing nothing about the stock, if they come in and they crush the farthest out options like this and the highest strikes they can get to, it can mean that a cash takeover is going to happen, because if this gets taken over for cash, then then these December vols will, these December out of the money calls will go to zero. So any premium in the 35s will go to zero. But the thing is like, that doesn't make sense for this one, because these are basically at pretty much very close to at the money options. So even if there was a cash takeover, it would go up a little bit, assuming that they bid it up. So this is not a cash takeover. But generally, if you see a stock that like they're coming to and they're just killing the farthest out options they can get out of the money calls, then be concerned about some sort of cash takeover deal, because the out of the money calls would go to zero. And that, like I said, this isn't that sort of situation though, because if this were in play and there was a cash takeover, these calls could be easily in the money, so it wouldn't be a great option for someone to sell. Let's just look at this, the stock here. Very interesting trade in that one, because it looks like buying these, how could you really go wrong? You're paying $1 for something that's way out, that's just slightly out of the money. If you bought these calls, you could sell some stock against it, and the stock's easy to borrow, so you could buying these calls would let you put on a really cheap straddle far out at a really low volatility. So interesting trade. I wouldn't actually mind probably getting in on a little bit of that one, buying some of those, because there's not a whole lot of risk to it, and you've got a long time to go. Anyways, let's see what else we got out of here. So let's take a look at this JASO for a second. So, part of my point with this is you need to go and check out some of these things and see what's going on, because there's stuff out there that has opportunity, and there's market makers trading this stuff, but why not get in it? Why not get in on it if some prices get kind of extreme in one of these issues, why not get in on it as a public customer? And JA Solar Holdings, ADR. And let's see what option this was that traded. So implied volatility in 60%, and this is the December 6th put. And I'm going to switch my chart to imply an open interest here. Okay, so December 6th puts. 5 bid at 60, so I don't know what they traded at. It's going to tell us here. Let's see. Once again, looks like a really cheap option. Maybe somebody just who's really long this, trying to get some more income, trying to get some income off it. So it looks like it says last 125. Huh. I mean, I see the puts offered at 60 cents. It says last 125. I don't know on that one. That one's a confusing one to me. I'm going to check it out today and see what the market is once these open, and I'm going to research JASO a little bit. So barchart.com, check out this options activity stuff. It's very interesting. It can give you some great trade ideas. I think it's a good thing to screen highest implied volatility stuff, because that's the stuff with the real meat on the bones, and stuff that's moving around a lot is interesting. Most actives is also can be interesting. I do check out most actives to see UVXY option stuff. This is just going to give you an idea, and this is by stock, so it just gives you an idea of what's going on and where. You know, when you're getting started in options trading, it's good to know where your liquidity is. These are the ones that are trading a lot of contracts, and you can see IQ is up there, and so you're not going to be just stuck. So interesting. Percent puts and calls, so on and so forth. All right, so let's check briefly back in with the markets here and go to our dashboard. And the rally is on still. E-mini's up 4, Dow futures up 50, NASDAQ futures up 12. I was talking for a little while about some high volatility and interesting plays. I'm looking at that Tesla calendar spread, collecting a little theta there. That seems kind of interesting to me. Anyway, so that's all I have for you for right now. Thanks for watching. I know the show was kind of early today. We may have a little bit more coming on later. And oh, I did want to do one more thing. If we go to StockTwits, we do have a competition every week of who can guess the closing price of UVXY. And I did say I was going to announce the winners. And the winner for last week was DB. And then the winner for the week before was you know who is... He was like, it was his first time doing the competition, and he won it. So, congratulations. Usually Pat wins or Tony, but you know who won 2 weeks ago, and then DB won last week's competition. If you do want to get in on the competition, maybe check us, come hang out with us on the StockTwits. On the StockTwits UVXY thread, and maybe you can join the competition to guess where UVXY will close or get pinned. And I don't have, for some reason, DB's total name is eluding me for a second, but DB did win the second thing. Anyways, so thanks for watching today, and I will see you soon.
Looking out across the nighttime, the city winks asleep beside. Hear his voice shake my window, sweet scent